he had just lost money that wasn't his, and somewhere across town, someone was waiting for it back. Not a stranger, someone who trusted him, someone who believed in him. And now he had to figure out what to say. His name was Daniel, 32 years old, Lagos, Nigeria, a civil engineer by training, but a dreamer by nature. Daniel wasn't reckless, he wasn't careless. He was the kind of man who showed up early, worked late, and still felt like life was moving too slowly for his ambitions. He had a small apartment, a laptop, and a hunger that most people around him didn't understand. He had discovered trading 2 years before this story begins, and in those 2 years, he had learned enough to be dangerous. Not dangerous to the market, dangerous to himself. He had small wins, consistent enough to make him believe, consistent enough to make him think the only thing standing between him and real money was capital. He just needed more money to work with, that was all. His older brother Emeka had always believed in him. When Daniel approached him with the idea, he didn't pitch it like a gamble. He came with a track record, screenshots of winning trades, a notebook full of analysis. He was calm, confident, and prepared. Emeka listened, and then Emeka said yes. 400,000 naira. Every kobo of it, saved over 18 months. Daniel remembers how that felt. He remembers sitting in front of his screen that first morning with the funded account and feeling like the door had finally opened, like this was the moment everything was going to change. He placed his first trade. It won. He placed his second. It won too. He smiled and thought to himself, I knew it. I was just waiting for the right capital. He had no idea what was coming. The third trade lost. It was small. He told himself it was fine. Every strategy has losses. But something shifted that day that Daniel didn't notice immediately. Something quiet, something underneath. Because this wasn't his money. When he used to lose his own funds, he could breathe, he could step back, he could follow his rules. But now, when the loss hit, he didn't feel discipline. He felt Emeka. He felt the 18 months it took to save that money. He felt the trust behind the handshake. And that feeling made him do something he never did before. He entered another trade immediately to recover it. That one lost too. So he entered another, and another. Within 3 days, Daniel had broken every rule he ever set for himself. He was trading with no clear setup. He was moving his stop losses, hoping the market would turn. He was staring at screens at 2 a.m. when the London session opened, running on coffee and anxiety, trying to claw back what was already gone. He stopped eating properly. He stopped picking up calls from friends. When Emeka called to check in, he would answer briefly and say everything was fine. Everything was not fine. The account was bleeding, and the more it bled, the more desperate he became. And the more desperate he became, the worse his decisions got. It is a spiral that every trader who has ever traded borrowed money knows too well. The pressure doesn't just affect your emotions, it rewires your entire decision-making. You are no longer trading a strategy, you are trading fear. And fear is the worst trader in the world. 6 weeks after he received the money, Daniel's account was down to 40,000 naira. He had lost nearly 90%. He sat in his apartment that evening and did not move for a long time. The screen was still on, the charts were still moving, but Daniel was somewhere else entirely. He had to call Emeka. That call lasted 4 minutes. He remembers because he looked at his phone after it ended and stared at the screen like it was something foreign. Emeka didn't shout. That almost made it worse. He just went quiet. And in that silence was everything. The disappointment, the confusion, and the fractured trust between two brothers who had never had a problem before this. They still speak today, but something between them is different now. And Daniel carries that. Not just the financial loss, but but the weight of what borrowing that money actually cost him. Here is what I want you to understand from Daniel's story. He was not a bad trader. He had a strategy, he had discipline, he had a track record. But the moment he introduced borrowed money into his trading, all of that collapsed. Not because the market changed, because he changed. Borrowed money brings borrowed emotions into your trading, and you cannot trade clearly under that weight. Trading requires one thing above everything else: a clear mind. A mind that can follow a plan, accept a loss, and move to the next trade without panic. The moment financial pressure enters that space, your psychology is already compromised before you even place a trade. The market doesn't care where your money came from, but your mind does, and your mind is your most important trading tool. If you are currently trading with money that belongs to someone else, whether it's a loan, a family member, or a friend, I want you to hear this clearly. The risk is not just financial. The risk is psychological, and the psychological damage can outlast the financial loss by years. Start with what is yours. Start small if you have to. Build from a foundation of clarity, not pressure. The market will always be there. Trade it on your own terms. Daniel eventually rebuilt, slowly, quietly, with his own money and his own pace. But he'll tell you himself, the most expensive lesson he ever paid for in trading was not in pips or percentages. It was in a 4-minute phone call to his brother. Some debts cannot be repaid with money.